This is David Craig for HowTheMarketWorks.com's Education Center. This is the beginning of a series on chart analysis. Chart analysis is very similar to technical analysis, which is primarily interested in two things. One is volume, and the second is price. Now these two things go together very similar to probably what you're used to in supply and demand. When large institutional buyers like banks and mutual funds get interested in a stock, they start buying in large blocks. So they'll drive demand up as they're buying in the big blocks. And what happens with increased demand? Price goes up. On the other hand, if one of these institutional investors get disillusioned about a stock or a company, they'll start dumping their inventory of stock. In this case, supply will go up. And what happens with supply increases? Price goes down. So as retail investors, you and I need to follow the trend created by these institutional investors. When we see a spike in volume, we key on price. What's happening to price at this point? Are the institutions buying, causing the price to go up, or are they selling, causing the price to go down? Either way, we jump on board and follow suit. Well, that's it for our first seminar. In our next one, we'll be going over the basic building blocks of charts and how you could look at the data and understand what's going on in the charts. The episode after that, we'll be looking at chart patterns, and so you can put the whole thing together, looking at a pattern and seeing what they mean. So at this point, I'm David Craig signing off for How the Market Works. Hope to see you again in our next episode.